Hey everybody, Gary with Basecamp Trading. Let's take a look at a really bearish setup we had in crude oil futures today. This is our 30-minute chart in crude, and you can see that coming out of the London session, technically we had changed the trend. We had a lower low right here, which at this point broke the uptrend, because we broke below the previous pivot low, which was back here. So we had a lower low right here in crude. This broke the uptrend, and then we put in a lower high in crude right here, which changed the trend. Now we went from higher low to higher high to lower low and lower high. So we changed the trend in crude. And then coming into the US session, crude was actually kind of all over the place. We had this initial push up off the pit open, and then we left a topping tail, and this bar closed down, sitting right on top of the 50 EMA support. And this bar, we were both up and down. We right here it opened, we were up, then we were down, and then we were back up. Then this bar opened right here, and we were up, and then we went down. The entire body of this bar was all selling. We left the topping tail, entire body of the bar was all selling, causing the 5 and 13 to cross to the downside and triggering some bearish divergence and causing the fast and the slow line to cross to the downside. This is the histogram on this bar right here when it closed, showing that the fast and slow line had crossed to the downside. Now, by pure definition, this really isn't bearish divergence, because your high on this bar was actually 72.10. The high on this bar was only 72.06. So it wasn't a higher high with a lower high on momentum, but it was close to an equal high with quite a bit lower high. I mean, this is a pretty big divergence right here. Again, I know officially this is not divergence because it's not being a higher high and a lower high, but you can definitely see momentum was weakening, and then this bar right here caused the fast and the slow line to cross to the downside as the 5 and 13 were crossing to the downside. And then crude made a nice run lower. We got extended, came down here, touched significantly undervalued, did a little consolidating, made another leg lower, got undervalued, and crude's now bouncing after being significantly undervalued. Here's how we were trading it on our Renko chart. And you can see right here, this is where crude, this was the crude pit open right here, actually, was right here. And crude pushed higher, and then it pulled back, and then it went up, and then it chopped all over the place. And again, early on, crude literally was all over. It was just up, it was down, it was back and forth, really choppy. But then we set a range, and then right in here is where we formed that bearish shooting star. Left the topping tail, the entire body of the bar was selling, and then right here is where the next bar triggered that in. That next bar had just a little topping tail, and then it triggered that shooting star into the downside. We broke underneath our compression line, that triggered us, and that actually triggered us in at 71.54. Our initial target to the downside was $70.84. So if you traded to that target and took everything off, you still would have had the opportunity to grab about $700 per contract. Our next target was 70.62. So if you were trailing your runner past our initial target, you still had the opportunity to grab another couple $100 per contract. So anywhere from potential of $900 to $700 or $800 per contract, just depending on how you're trading this initial move to the downside. But again, as you know, we trade to targets all the time. We usually will take at least one of our contracts off at first target, lock that in, and then a lot of times we trail a runner. Not always, but a lot of times we trail a runner. We were getting a little extended, but we hadn't made divergence or anything. So at this point, you may have wanted to trail your runner a little bit. But again, all depends on how you're trading this. But we did hit our first 2 targets. We got extended. We went into some consolidation. In fact, we kind of pushed a little higher and then pulled back down, went into consolidation. And then you can see right here, we had our power line at the top, our power line at the bottom, and we had a compression channel right here. We broke out of compression to the downside. Our 30-minute chart was still bearish. We broke underneath this previous support area, and our next target to the downside was $70.13. This triggered us in on the compression break. Now, we had an aggressive fast line zero touch out of the cloud. If you were trading the aggressive short, you would have been in around 70.80. If you waited for the compression break, you would have been in at 70.83. But either way, you had the opportunity to grab, $600-700 per contract on this move down. At this point, you definitely would have been wanting to take profit at the target. We were extended. We've already made a pretty good size move. I mean, this was a nice 90 tick drop here, and then you had, another 60 ticks drop here, 60-70 tick drop right here. At this point, you're pretty extended. You're not looking probably to take any more shorts at this period. You've made a large move to the downside at that point. And crude actually ended up continuing to move a little lower, not kind of chopped lower. We had a couple setups, but you would have got chopped up a little bit. But at this point, we were so extended, really wasn't looking to trade crude short anymore at that point anyways. But we did have a couple really nice initial trades off of that shooting star on the 30-minute chart. Came down, tagged out 2 first targets, consolidated, and then made a compression break to the downside for another nice run lower. So some nice bearish opportunities.